Superstars, this is Professor Don Bush. I've been a professor for about 30 years and a CPA for about that long, and I've got great ways to explain accounting. So today what we're going to do is we're going to learn about the gateway, the door into the accounting system. Now here's what we've covered so far, and if you haven't watched any of the previous videos, I suggest that you go back and watch them and study them because they will help you today. Otherwise, this video may not make a lot of sense. So I'll assume that you're up to speed here. So here's what's going on. I've got Fred's Snowblower Service, which is based on a true story. Fred's Snowblower Service is in Breckenridge, Colorado. The names have been changed to protect the innocent, and I've got a lot of transactions here for us that we're going to process. Now these are the exact same transactions that I've been using in the last couple of videos, and I'm doing this on purpose so that way you can see how this all fits together so you don't get confused on new and different transactions. What we're trying to do is learn the process. So what we've done in the past, we've processed these transactions, and what we did is we posted them directly into the general ledger. And here's the general ledger for Fred's Snowblower Service. Now the general ledger is the heart and soul of the accounting system. It's where it all comes together. It's where all the data is stored. And the general ledger is pretty valuable in a lot of ways. From the general ledger, we do our financial statements, but also you can answer a lot of questions like, how much cash do we have today? You can look it up in the general ledger, and the general ledger will tell you. How much have we spent on marketing expense this month? The general ledger will tell you. What do we have in inventory? What's our balance of inventory? The general ledger will tell you. How far in debt are we? Well, the general ledger will tell you that too. So it's very valuable. It answers a lot of questions. However, it's not the doorway. It's not the entrance into the accounting system. Now, it has been in the last couple of videos because we just didn't know any better. All right. So we'll find out how accounting information gets into the system. Now, that is with the general journal. Now the general journal, it's a good way to learn about the doorway, the gateway into the accounting system when you're first starting out. But I got to tell you that soon you'll learn that there's better and faster ways to do this. So don't think that accounting is a lot of drudgery. It really isn't. There's a lot of easier ways to do this. But this is a great way to understand how it all works. Now the general journal, what it is, it's a chronological listing of what's going on in your business. It's a chronological listing of the transactions that are happening. For example, if your boss said, hey, did our customer pay us last Tuesday? Well, you could look it up in the general journal. It'd be a lot easier that way. If your boss asked, hey, how much did we deposit in the bank yesterday? Well, the general journal could help you there too. Or if there was another question, hey, the electric company tells us that we didn't pay our bill last month. I thought we paid our bill. Can you look and see if we paid it? We were supposed to pay it on the 15th. So the general journal can answer questions like that. So you can get information from the general journal that you can't get from the general ledger. So you can get, both are good, both are important. A lot of people don't understand that. But anyways, this general journal, it's pretty easy to fill out. Might be a little confusing at first, but we'll go through some examples. And I've got some good ways to explain it and some little tricks to help you remember. So here we go, folks. I'm going to split the screen so we can see what is going on here. So here's the transactions, and I'm going to split the screen so we can see more of the general journal. So here we go. I've got it set up. In the top part of the screen, I've got the first transaction, and I've got the general journal listed down here. So let's just focus on the general journal for now. Now these transactions, once again, they're identical to the transactions I used in the last couple of videos because I didn't want to get you hung up on new transactions. So here we go. Number one, Fred deposited $5,000 in his personal savings at a bank as his primary business account. Fred considered the $5,000 deposit to be an investment in his business and received $5,000 worth of Fred's snowblower service common stock. So Fred is just starting this business. He is just now in the month of June beginning this business, and this is the first transaction. Now, something that's really critical in the general journal here is the date, because if the boss asked you, hey, didn't we pay our bill last Tuesday? Well, you'd have to know the date in order to look it up. If you don't write down the date, it'd be really hard to look things up. This general journal would not work very well without a date. Now, I don't have any dates here, but I do have the number 1. So I'm going to put the number 1 here, and that's going to be our date. All right, we'll just pretend it's our date. Now, what's going on here? Fred is putting money into his business bank account. So his business bank account is receiving $5,000. So I'm going to give you a clue here. And if you can remember this, this will help you with probably at least half of your transactions, especially in beginning accounting. And here's my clue. Whenever money comes in, list cash first. Look at that. Whenever money comes in, list cash first. Now, money is coming into this business. Fred is taking $5,000 of his personal money and putting it into his business bank account. All right, and how much is he putting in here? He's putting in $5,000. So whatever gets listed first is going in the debit column. Now, the debit column, that simply means left. Debit means left. Debit does not mean add. It does not mean subtract. It does not mean good. It does not mean bad. Doesn't mean up. Doesn't mean down. Doesn't mean anything except for left. That's all it means. Right there. Now, what is Fred getting in exchange for this cash? He's getting some common stock. So I'm going to list common stock here next, and I will put it on the right-hand side. Now, the old Latin word for right is credit, or credere if you want to be really super technical. But credit just means right. Credit does not mean good, doesn't mean bad, doesn't mean add, does not mean subtract, doesn't mean anything except for right. So I've got left and right. In fact, I could have written left and right, but I wanted to be a little bit more exact here since you're trying to learn accounting. So let's look at this. So here's my rule of thumb that you want to remember, and it'll help you when you do these transactions. Whenever the business receives money, list cash first. The other thing will get listed second. Also, check out that I indented this second thing. I indented common stock. And that way we know it's off to the right. So cash is, if you might think of it this way, it's not indented, but it's a little more to the left. Common stock is a little more to the right. Left, right. It's all about left and right. Now, what I don't want you guys doing here is doing something like this. Do not do that, where you don't indent at all. A lot of students do that. I don't know why they do that. Maybe they're just trying to play it safe. They don't know if it's left or right, so they just line out everything up. And it doesn't work that way. Also, you don't need to indent it too much, all right? I mean, that's going a little overboard there. But just give it a little indenting. I'll tell you what I'm doing here in Excel, and it looks pretty nice, is I'm indenting it 6 spaces. 1, 2, 3, 4, 5, 6. You don't have to indent it 6 spaces, but I think it looks kind of nice. That's about how you want it to look. So if you indent it 5 spaces or 6 spaces, 8 spaces, whatever looks nice, all right? So let's go down to transaction number 2. Now, Fred rented a store or shop, paid the landlord $1,000. Oh man, here I'm going to give you some more clues. Now, I don't have a date here, but I'll put the number 2. Dates are important. Now, up in transaction number 1, when cash came in, we listed cash first. But in this case, cash is going out. So we are going to list cash second. Look at that. Cash is being listed second. There we are. So let me repeat this. When cash comes in, list it first. When cash goes out, list it second. Easy. I mean, that'll get you oh gosh, probably 60, 70% of the way through accounting class right there. Also, here's another rule of thumb, folks. Now, this is for rent, for the store shop rent and the landlord. And we're going to have rent expense, 4,000. So here's another clue. Except in minor exceptions, expenses are always listed first. Okay, so here's our clues. When cash comes in, listed first. When cash goes out, listed second. And expenses are always listed first, all right? Got that? Rent expenses are always listed first. If you follow that, you'll get things right, like, I'd say 70-80% of the time, right there. Not bad. Hey, 70-80%, that'll get you past, you'll pass the class. Number 3, Fred purchased $1,500 snowblower repair parts with cash to have on hand when customers want snowblowers to be repaired. These parts are considered to be parts inventory. So Fred is spending cash. Cash is going out. How are you going to list cash? Do you remember? When cash comes in, listed first. When cash goes out, listed second. So we're going to list it second. Cash is going out. And how much cash is going out? All right. Now, so what is Fred getting? He's getting parts inventory. All right. So parts inventory. So here's how I remember how to do this. When cash goes out, listed second. So the other thing must have been listed first, right? That's the only way it works. So here we go. There we are. All right. Coming down to entry number 4. Fred signed a contract with a snowblower distributor to sell new snowblowers. Fred purchased 4 snowblowers for a total price of $4,000. These snowblowers are considered to be merchandise inventory. Fred did not pay cash, but rather the snowblowers were purchased on account. So it's like, oh my goodness, what are we going to do now? There's no cash involved. I don't know what to do. Because when cash comes in, I listed first. When cash goes out, I listed second. But no cash is involved. I don't know what to do here for this 4th one. Well, here's what you can do. This is merchandise inventory. And you know what? Just a moment ago in transaction number 3, we bought parts inventory. How'd that work? Well, parts inventory was listed first. Wow, I wonder if that's what we do. Yeah, it is. Okay. And some of these transactions, it just takes a little practice. Just got to get used to it. I'm not going to go into a way to remember it, but other than what I just did. Now, no cash is being paid, but it's being paid on account. On account means there's a liability. Money's owed. Accounts payable. So you want to list accounts payable. $4,000. There you go. All right, coming down the list. Now, Fred paid a payment to the snowblower distributor of $250 cash in regard to the 4 snowblowers. Fred will be making monthly payments until the 4 snowblowers are completely paid for. So here's transaction number 5. Money is going out. So folks, are you going to list money first or second? Money is going out. I hope you are listening and you know that cash is going out. We're going to list it second. And how much money is going out? There we go. Now, you have to ask, well, why is the money going out? Why is it going out? Well, he's paying down part of this bill for accounts payable. He's paying down part of that bill. So there we go, accounts payable. So, hey, here's something that you can remember. I mean, if you're doing okay remembering this stuff, if not, you'll get it. It just takes time. But hey, when you buy stuff on account, accounts payable is listed second. When you pay the bill, you list it first. So it's easy. It's easy. It just takes practice. Takes time. Number 6. Now, Fred signed a contract with the city of Breckenridge to do basic snow blower maintenance during the winter season. The contract is for $20,000, and so far, Fred has not completed any work for the city, and the city has not paid Fred any money. So, ladies and gentlemen, here, what this means is no work has been done. you can't claim revenue. That's really important to know that and understand it. If you're an accounting major or not, know this. You cannot claim revenue if you've not done your work. And a lot of people have gone to prison over this. It's the number one form of accounting fraud, claiming revenue without doing your work. All right? So here you go. Number 6 here. So it can't claim revenue. Also, no cash has changed hands. So in other words, not much really has happened other than signing of the contract, which is a wonderful thing. But since no cash has changed hands and no work has been done, we're not going to make a journal entry at all. And sometimes that happens. So I'm just going to write no entry. On to number 7 here. Number 7, Fred spent $2,000 to have a business website created and get social media accounts set up. Fred considers this to be marketing expense. So this is transaction number 7. Now, Fred spent $2,000. Money is going out. Where are we going to put the cash? First or second? I hope you remember second. All right. There's technical reasons why this works, but if you can remember this, it always works. And it'll get you really far. Now, marketing expense. Since cash was listed second, marketing expense has got to be listed first. And by the way, that's another rule of thumb. Expenses are always listed first. There you go. If you can remember that, you can do accounting. Number 8. On to transaction number 8. Fred paid wages to assistant Sally, $3,000. This ought to be so easy. Money's going out. List cash second. There you go. And this is wages expense. Expenses are always listed first. There you go. All right. I hope you remember this. I mean, I've said that now probably 10 times. I hope you guys are getting sick of it because that's how you learn, repetition. Number 9, Fred and Sally repaired snowblowers, chainsaws, and weed whackers, earning a total of $15,000. All the customers paid in cash. Well, folks, money is coming in, and I have to say a lot of it is coming in. So when money comes in, list cash first. There you go. Now, Fred and Sally did their jobs. Their job is to fix snowblowers and chainsaws and weed whackers. And they did their job. And so when money comes in from doing your job, that is revenue. And that's when you want to claim revenue, when you do your job. $15,000. On to transaction number 10. In order to complete the repairs, Fred had to purchase with cash repair parts, costing a total of $4,000. Okay, so this is transaction 10. Now money is going out. We are going to list cash second. All right. I think by now you know that. All right. I hope so. Now we're going to call this parts expense. I almost went down the wrong path here. This is going to be parts expense because these parts were used up in doing the job. So whenever you use up resources to do your job, that's an expense. And expenses are always listed first. Right? There we go. Hey, this is getting easy, I hope, right? Nothing to this. Coming down to transaction number 11. Fred had to purchase a drill press, grinder, air compressor for the shop for a total cost of $3,500. These tools are considered to be equipment. The tools were not purchased with cash, but were purchased on account from Home Depot. So no cash is involved, and this is not an expense. And so it's like, oh, how do we figure this out? Well, we did a transaction very similar to this. Going up here to transaction number 4, look at this. Transaction number 4, we bought merchandise inventory on account. What did we do? We listed merchandise inventory first, accounts payable second. This is the exact same pattern. Other than it's not going to be merchandise inventory, it's going to be equipment. Other than that, it's the same deal. And accounts payable. And how much was it for? It was for $3,500. $3,500. Coming down to transaction number 12. All right, Fred withdrew $100 from the business cash account. Call to withdraw a dividend. And Fred and Sally celebrated the first month in business by buying pizza and beer. So they had a good time. And what is going on here is money is coming out of the business. Fred is spending money. So when money comes out of the business, you put cash on the right-hand side. And it's just for $100, but it's important to keep track of this. Now, this is not an expense. This is not an expense. It's a withdrawal. Fred is withdrawing this for personal reasons. And because, Fred's job is to repair snowblowers and not to, buy pizza and beer. So this is a withdrawal out of the business. And so we're going to call it a dividend. Now, a dividend is just simply a withdrawal. When an owner takes money out for personal purposes, it's withdrawal. Now, big businesses call them dividends, but they're the exact same thing. It's the exact same idea for $100. There we go. Now, a lot of folks ask, well, do you have to total up this thing? We're finished with it. We did all our transactions. You have to total this up? And the answer is no. What I would do, though, is I would just make sure, did I write the same number down over and over again? Look at that. Does it balance out? You can visually tell. I don't think there's a need to add it up unless you really want to. I mean, there's no rule why you can't add it up, but I would just make sure they equal. Now, in the next step here, what we need to do is we need to take these numbers and post them to the general ledger. So that's our next step here, and then we'll stop with that. So here we go. I'm going to remove this split. So folks, I've got the computer screen split, and on the top part of the screen, I've got the general journal. And down in the bottom part here, I've got the general ledger. And all we're going to do, folks, and it's the easiest thing in the world, but it's the place where people mess up. I think it's just too easy. That's the problem. People get distracted. They start watching YouTube videos or something. And so here's what you do here. Here's my general journal. We did all these transactions. All we're going to do is transfer these numbers down here to the general ledger, because the general ledger is the heart and soul of the accounting system. And it's not like double work or anything. There's a big reason why we do it this way. Okay, so here's how you do it. It's easy. Cash is on the left. And here it is. It's on the left for $5,000. So put it on the left-hand side of the cash account. There you go. Easy, right? Common stock is on the right-hand side. It's here on the right. Credit means right. Put it on the right-hand side of common stock. Hey, that was easy, right? If you can do that, you can do accounting, right? That's all there is to it. Let's come up here to transaction number 2. Rent expense is on the left. Well, put it on the left-hand side of rent expense. Easy. Cash is on the right-hand side. Here it is on the right-hand side for $1,000. So let's put it on the right-hand side. There we go. Now, I'm going to give you guys a clue. It's real easy to get lost and to not remember if you've posted anything. So here's a thought, is once you post something, I'm doing this in Excel. So once you do something, what you can do is change the color. I'm going to change it like that, meaning I posted that, and that's posted. And I posted these two numbers also, because it's really easy to forget. If you get distracted at all, you can forget if you've done something. And then it's really frustrating to try to figure out, well, where'd you go wrong? So coming down here to parts inventory. Parts inventory is on the left for $1,500. Parts inventory on the left for $1,500. There you go. I'm going to highlight that, meaning I did it. Cash is on the right for $1,500, so put it on the right for $1,500. Now, you might get in a hurry and say, oh, this is boring, and it is kind of boring and monotonous and tedious, but don't hurry. Just take your time and go slow. Otherwise, you're going to be looking for mistakes. Number 4, merchandise inventory is on the left, so let's put $4,000 on the left. There you are, merchandise inventory. There you are on the left. Merchandise inventory, done. Accounts payable is on the right. So let's put it on the right here for $4,000. Now, folks, by highlighting this, by taking the time to highlight this, I know I posted it, I know I did it, and I won't get mixed up. Accounts payable is on the left for $250. So here we are for $250. And cash is on the right for $250. So here we go. Number 6, there's no entry. Oh, and I forgot to mark these. There we go. Mark them as done. Don't get sloppy or lazy, folks. If you do, take your time, do a good job, don't hurry. It'll go smoothly, it'll be easy, and you'll say, hey, this accounting's not so bad. I don't mess up. Marketing expense on the left for $2,000. And cash is on the right for $2,000. So let's go to our cash account. There it is on the right. So all we're doing is transferring numbers. This really requires no brain power whatsoever. Wages expense on the left for $3,000. There you are. Wages expense on the left for $3,000. Let's get that squared away. There we are. And I did that. Cash is on the right for $3,000. So here we go. Cash is on the right for $3,000. There we are. Well, I think my camera shut off. You know, my camera only records for 30 minutes, so you may have lost this, but I think you got the hang of this. So if you missed out on any of this, you know what to do, right? Okay, I'm on the last one here. Number 12, dividends here. So dividends, $100. It's on the left. It's on the left. So here we are, dividends on the left. I'm going to mark it off. That way I know I posted it. Cash is on the right for $100. There we go. Cash is on the right. Oh, not that. There we go. And I'm going to mark it off. So guys and gals, if you have been doing this very methodical, you can go back and check this general journal and you can say, hey, look at this. I marked everything off. All right. Everything that needed to be posted was posted. I did not skip any. And then what you would do next here, I'm going to undo this split screen. So we're done with that general journal. That general journal is the gateway into the accounting system. So all you would do is, if you've been watching the previous videos, you know what to do now. Just take over from here in the general journal. You need to find out, well, what's the balance in the cash account? And if you use Excel, it's really easy. Add up all the money coming in, subtract away all the money going out, boom, you're done. And the other accounts over here, they only have one entry in them, so that's the balance right there. Accounts payable, all you do here to figure out the balance is this is the money that you borrowed, this is the money you paid back, so how much do you still owe? There you go, you're done. All the other accounts are done too. What we're doing here is adding up the left-hand side, folks, left-hand side. So let's add up everything on the left-hand side. What we would do is we would add up the $81.50 under cash, $1,500 under parts, merchandise, inventory, and equipment. We would add those up, and if we add up all these numbers, it ought to come to $1,750. And folks, if you're doing this on Excel, you're not going to make as many mistakes. Let's add up the right side. So all we would do here is we would add up everything on the right. So accounts payable, there's a righty for $7,250. Common stock for $5,000. Repair revenue for $15,000. These are all on the right-hand side, but you have to be careful. These expenses are on the left. So here's what you do: is you go $7,250, add $5,000, add $15,000, but subtract $1,000, subtract $2,000, subtract $3,000. So everything that's on the left, you need to subtract. Subtract the $4,000, even subtract that $100. And if you do this correctly, if you do it right, guess what you're going to have if you do it right? And it equals. So the left side equals the right side. And then what you could do, if you wanted, you could do a formal trial balance. So in a lot of your assignments, That's what you need to do, is a formal trial balance. And that's easy. Here, I'm going to split the screen. So down here at the bottom, here's my trial balance, and up here above are my general ledger accounts. And once again, just beating this into the ground here, the general ledger up here, the general ledger, there you are, general ledger, that is the key to the accounting system. It's the heart and soul, folks. It truly is. So on this trial balance here, that is more formal. It's one that you would expect to see for a business. All you do is say, well, how much cash do they have? $8,150. So you just drop it in there, $8,150. How much do they have in parts inventory? $1,500. Drop that down. How about merchandise inventory? $4,000. So you just drop it down there. How about equipment? $3,500. $3,500. And if you notice, everything over here is on the left. And on our trial balance, everything here is on the left. See, lefties on the left and righties on the right. So let's go up here to accounts payable. Now accounts payable is on the right for $7,250, right? So here we go, $7,250. Common stock is on the right for $5,000, right there. And revenue is on the right. Look at that. Revenue's on the right. So there you go. But the expenses are on the left. Oh, what are we going to do? Rent expense. Rent expense is on the left for 100, or for, I'm sorry, 1,000. And marketing expense is on the left for 2,000. Wages expense is on the left for 3,000. Parts expense is on the left for 4,000. And dividend. There you go, $100. And that's all the accounts that Fred has here. So I'm going to remove this split. And here's our trial balance. Now we have to make sure it balances, so what we're going to do is we're going to add up this column, and my goodness, I hope you're doing this on Excel, because if you do it with your calculator, chances are good you're going to have big thumbs and make a mistake. So use Excel. It'll add it up. See how quick that is? And here we go, add up the right side, the credit side, and it balances. So we know we did a good job. So there you go. And we're not going to do the financial statements, but what you could do is take this information from the trial balance and do the financial statements. And if you're wondering, oh man, I don't know how to do this, I've never seen financial statements. Well, in some of the previous videos, you can learn how to do this. It's really easy, and it's the exact same example too. So there you go, folks. That is the introduction to journal entries. So what do you want to remember? Here's the key when it comes to the general journal. When cash comes in, list it first. When cash goes out, list it second. And expenses are always listed first. All right, there you go. So if you enjoyed this video, if it helped you out, let me know. And I'll make more videos if people like these. And so until next time, over and out.